You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. Well, we're just about at the end of October. It's the 26th. And, well, looks like we're getting a bounce, even in spite of lower earnings by two market darlings, Microsoft and Alphabet, two of the major FANG stocks. So let's talk with our good friend, Avi Gilbert, and get an idea of where this thing is heading. Avi, it's great to have you back on. And your site, obviously, is ElliottWaveTrader.net. So what are you thinking of looking at the recent market action?
Well, we had a support in the market for quite some time. That's where we bounced off, even though everybody got surprised by it. It seems that's where we bottomed recently, and that was on the same day where the CPA came in so negatively. Everybody thought we were going to crash. We've done the exact opposite of what everybody expected, which is what normally happens in the market. And there is potential here that we could be rallying for a few more weeks. And the nature of the move up will give me a better idea of where we can top out, maybe even out to into early 2023. And depending on the structure, it's going to tell us if we have another bigger leg down or not.
Right. And so what's your instincts telling you? Can you hazard a guess for us?
I got to tell you, until this first rally completes off the low, I'm 50-50 right here. I'm watching how the rally takes shape, and the manner in which we handle the 4,000 region on the S&P is probably going to tell me if we're going to see another higher high over 4,800 or not.
Mm-hmm. All right. And what about the geopolitical instability? High energy prices, high inflation. Where does all that figure in?
Well, I'll put it to you this way. The last time that the economists declared us in a recession, we began a 1,000 plus point strong rally off the lows. And that was in March of 2020. I really don't pay attention to the noise. The noise eventually reflects what the market is doing. And the noise usually lags what the market is doing.
Mm-hmm. So if there's a positive trend here that we're not seeing, what is it?
I from a macroeconomic standpoint, I'm not even going to hazard a guess, because like I said, the narrative will change based upon what the market is doing. If you remember back in March of 2020, as an example, the market was tanking into the 2,200 region lows. And, we began to start looking higher. And during the entire first 1,000 points of that rally, everybody was still scratching their head and saying, well, we're in a recession. Well, once we were about 1,300 or 1,400 points off that bottom, the economists said, we're no longer in a recession. So, like I said, the news and the macroeconomic flow will likely follow what the market does in a very, very lagging way. So I try to tune that out and just listen to what the market is telling me.
Okay. And it's always advisable to look at the charts rather than listen to the news or the noise, if you will. Such has been my experience. But when pessimism gets to the point where it is now, you've got the midterm elections stirring it up. Everything else, do the charts ever steer you wrong on this?
Well, yeah. There's no such thing as anybody being 100% right, and we deal in probabilities. But, if people are looking for the election to give them their answer, I'll remind them what happened at the last major election we had, when everybody thought that if Donald Trump was going to win, the market was going to crash in 2016. And we were pounding the table saying the market's about to rally strongly no matter who wins the election. So, again, a lot of this exogenous factor, news, events, at the end of the day, it really doesn't mean as much as people really think it does.
Mm-hmm. Well, I've often heard it said that the cycles create the news rather than the news creating the cycles.
That's fairly accurate. That is fairly accurate. And any student of the market for any long period of time has probably recognized that on their own.
Yeah. So, but geopolitical, everybody always wants to think what's happening now has never happened before in many respects, especially with the market. So therefore ignore history somewhat, but that's at your peril, isn't it?
I'll give you two things. The first thing I'll say is that ultimately, Ecclesiastes, anybody who knows their Bible knows Ecclesiastes and says, there's nothing new under the sun. And, there are many people that have recognized that at the end of the day, it's not necessarily the news that's necessarily going to drive the market. It's the interpretation of the market participants of that news is what drives the market. And which ultimately means the sentiment of the public is what's going to drive the perception of the news. Mm-hmm. So that's really how I see it.
And that was said thousands of years ago that there's nothing new under the sun, right?
Yep.
Yeah, well, there's a few new things. I mean, we got electric vehicles. They had chariots back then.
We're talking about the human condition.
Yeah, the human nature, human behavior. Yeah. Don't you think we evolved somewhat over time, though?
I'll be honest with you. I think our mammalian brain drives us more than people are willing to admit. We're still very much an emotionally driven being.
Mm-hmm. Yeah, I totally agree. With that, people don't change, but our external situation really evolves rather quickly, but internally it's very slow, right?
Pretty much.
Pretty much. So, all right. Now, other markets. What other markets should you be paying attention to?
Well, I think the metals market is getting extremely interesting to me. We are looking for a major bottoming. I'm not confident that it has already occurred. I think, for example, GDX and or silver may get one more lower low. But when you're dealing with GDX, gold, silver, I think anybody that is looking to layer in down here with the potential for maybe leaving a little more cash for one more lower low will be very, very happy as they look towards 2023. I think we're setting up for a major rally in the metals as we look into 2023.
If you were to buy now, thinking, "Hey, I'm not gonna buy at the bottom or sell at the top," would that be a bad move?
If you're willing to buy now and hold it into 2023 and 2024, I think it would be a very good move overall. As long as you're not a short-term trader. Like I said, there's still potential for a lower low to be seen over the coming month or so. But overall, if you're looking at buying near the lows, this is a great area in the metals.
Okay. Well, that's my feeling. And it looks to me like silver could very well have hit its low, but certainly gold hasn't.
I actually am looking at it the other way around.
Really?
I think silver has the lesser potential for having hit its low, whereas gold may have a greater potential to already having hit it and double bottom.
Okay. Well, hey, you're the chart reader, so we'll see. We'll see if you're right. You got any thoughts on energy?
Yeah, I mean, I'm still ultimately I'm looking for another major rally, which I guess everyone else is, but I'm still questioning if the low has actually been struck. For example, I'm looking at the USO right now as we're talking, and I've got about a 73 to 74 region resistance. as long as that resistance holds, then I think we can get one more loop down for a lower low before another major energy rally begins. But I think the energy market is trying, at least the oil market is trying to bottom out as well. Again, lower low looks more likely right now, as long as we hold the 73, 74 region on the USO.
Okay. Any feelings about nat gas?
Don't just survive, thrive. The Financial Survival Network.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has an excellent shareholder base, with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
I actually personally don't track nat gas, so I cannot offer any.
Okay.
I have analysts that handle that, so I really don't track it myself.
All right. So what else are we looking at that you're finding
U.S. dollar?
Yeah,
You
that's a good one. Let's talk about
the U.S.
that.
dollar. The U.S. dollar. I was looking for this to top out for a bit now, and the potential is still in place that it has topped out. I need to see the 109 region taken out strongly on the U.S. dollar to suggest that we're now heading into a year, maybe 18-month long pullback on the dollar. If we're able to hold 109 on the Dixie, then there's still potential for just one more higher high before we get that 12 to 18-month pullback I expect in the dollar.
And on the macro front, supposedly China has instructed its banks to dispose of dollars. I take all this with a grain because who knows what's really happening there.
Yeah, I mean, and everybody's saying that everybody's selling their around the world, everybody's selling their treasuries. I mean, I'm personally looking at treasuries as approaching a major bottoming. And for example, on TLT, I think over the next 18 to 24 months, we could be seeing 150 or higher on the TLT again.
Really?
So, I'm not a big believer that bonds are completely dead right now. After we get to 150 or so, then you're probably going to hear me changing my tune significantly, and we may have a setup for a bond crash at that point. But I think the bond market is attempting to bottom out down here, and I'm expecting a major rally over the next, again, 18 months, 24 months to take us into about 150 or so on the TLT.
Wow, and that's a level that hasn't been seen since a year ago in November, right?
Last time we saw that region was, the end of 2021.
Right. So that would seem to imply that interest rates could be heading lower.
Yeah, I think, like I said, have we confirmed the bottom? No. Once you get over the 2 levels to watch on the TLT, for example, 98 on the TLT is the first region of resistance, and then once you get over 105, then the market has likely begun the rally to 150.
Right. Yeah, and that's like we say, the majority of players are frustrated by the action in the market. Everybody's expecting higher rates, and the Fed to keep boosting interest rates and fighting inflation, et cetera. So that would be logical from that standpoint that the market's going to do them in.
Yeah, I mean, the market usually does what the least people expect. I mean, the last time I was looking at a bottoming of this significance was back in November of 2018, and the Fed was doing the same thing then. They were on a rate raising trend. They were pretty well entrenched that they were going to continue raising rates. The market looked like it was bottoming and it was going to turn. The market did turn, and the Fed eventually followed the market, which is what it historically does. The Fed usually follows the market.
All right. So the Fed's going to follow the market. So we could be looking at high dividend, high yield stocks really taking over here, huh?
Could be very, very possibly. I think you're going to see a major bounce in equities. I think you're going to, and the question still to yet be determined: are we going to get a higher high before a real bear market has begun, or has a real bear market really begun that'll take us years to get through?
Yeah, and then that's going to affect everything. Obviously, real estate, energy, you name it. I just find the energy situation fascinating because, we had that situation where oil was trading at negative price a year and a half ago, and now they have gas trading negative in Europe, and that could really set the site or set the stage for large increases. But so that's interesting that nobody's expecting this, are they?
It doesn't seem so. And, like I said, the market often does what the least of market participants expect, and usually turns when everybody is on heavily weighting the boat on one side of expectations.
Mm-hmm. Yep. Couldn't agree with you more. And I've been on the wrong side. Better to be a contrarian, but you have to be a contrarian at the right moment, don't you?
Absolutely. Being a contrarian when the bulls are stampeding right at you is not exactly the best place to be.
Yeah, with no cover, right? With no cover. Yeah. Well, hey, the world's an interesting place. The markets reflect it, and I guess we can pretty much look forward to more volatility, though. That's a given, isn't it?
Yeah. One way or another, I think you're probably going to be seeing volatility over the next few months. The question is the extent of the volatility. The greater the volatility we see over the next 2 months, obviously, it'll probably mean that the less likely the market is going to see a higher high. But if we're going to see a relatively smooth move up to about 4150, 4100, 4150 on the SPX in a relatively smooth move up, then I think that indicates that the market is setting up to rally to a new all-time high out in 2023, maybe 2024.
That is remarkable. I like the fact that you're the lone wolf here, Avi.
What can I tell you? I remember when we were hitting 2,200 on the S&P, like I said, back in the COVID crash in March of 2020, I was saying, look, from here we're going to 4,000, and that was a much easier call than this is. That was a much easier call than this is. And I was pretty adamant about that, and people thought I was crazy. I still think there's potential to go to 5,100, 5,300 on the S&P. I'm not going to have a better idea until I see how the market gets up to 4,100, 4,150.
Okay. VIX is like the epitome of the index that frustrates virtually everyone that gets into it, right?
Yeah, the problem with VIX is everybody has an expectation of what it must do in order for a bottom to be struck in the market. Most people were saying, well, we have to spike up to 40 in the VIX, but unfortunately, that is just an assumption based upon a handful of experiences. If you really do an analysis of how markets bottom, that is 100% not true. You don't have to see a big spike in the VIX. You can actually see a negative divergence in the VIX for a market to bottom. So I really don't take a lot from the VIX, the VIX stories that a lot of people tell.
Okay. All right, Avi. Well, hey, always thought-provoking, always against the grain. That's why we have you on the show. Appreciate you coming on. Just tell us how to find you and how do we subscribe to your service.
Thank you very much. We're on ElliottWaveTrader.net, 2 L's, 2 T's. We have about 20 some odd analysts covering markets all around the world and all types of commodities and so on and so forth, crypto and all. And you feel free to sign on for a 2-week free trial and see what we're about.
All right. I suggest you do that. You'll find the link in the show notes to this interview on financialsurvivalnetwork.com. Make sure you sign up for your free newsletter while you're there. Got a question for Avi, myself, concerning anything, markets, metals, whatever, shoot me an email, kl@kerrylutz.com, and shoot us an email. Tell us, how are you playing this? Are you expecting a major market bottom ahead, whether it be precious metals or energy or the stock market? Are you poised for it, or do you think it's ridiculous? Either way, we'd like to hear from you. And the email address, again, is kl@kerrylutz.com. Avi, as always, a pleasure. Thanks so much for coming by.
Thank you so much for having me.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.